Welcome to A Scrap Life, a podcast solely focused on the hustlers, grinders, operators, and business owners who live and breathe the scrap metal industry every day. Here is your host, Brett Eckhart.
What's going on, everybody? Another episode of The Scrap Life, but we are starting to start 2026 a little different of an angle. So you've got used to listening to The Trade with Chad Ellerbrock, and that's the ferrous trade. And we're still going to do that. I've got one of those coming up too. But I wanted to branch out because not everybody's just in the ferrous markets on the scrap side. You know, we're out there trading aluminum, we're trading copper, we're trading stainless, nickel, lead, and whatnot. And so I wanted to kind of went through my Rolodex and I said, okay, who do I do business with that understands the aluminum market, that can speak to you guys and say, you know, this is what the market's looking like from my perspective. And I came across a guy that I've been doing business with for a long time. His name's Mike Anderson. He's currently with Schupan Sons. He's the VP of materials trading there, and he's a guy I trust. He's a guy that I know believes that I know knows the market, and I wanted to get him on here once a month and just kind of hammer out the aluminum markets. So, Mike, thanks for joining us, man. I appreciate you taking the time out of your day and continuing down this journey with me.
Yeah, my pleasure to be here. Appreciate the kind words as well. Yeah.
So where's your office at? Where are you sitting at right now? I see the bricks in the background, that little forklift in the back. Where are you at?
Believe it or not, I rent an office here in Northeast Ohio from a buddy who owns a maple syrup manufacturing plant. So
Okay.
out my front window, they're producing maple syrup. Out the back's the parking lot. But yeah, Northeast Ohio is kind of where I reside. I work remotely. You know, our whole trading division's kind of scattered across the U.S.
So for those people that don't know a lot about Schupan, I think the name's is pretty well known. But what you can give us a little bit of background about Schupan and kind of what
Yeah.
they're about, and you know, and we'll go from there.
So I'll probably get the number wrong, but I think we're 57 or 58-year-old family-owned company,
Okay.
going into third generation ownership, that operate based in Kalamazoo, Michigan. We've got facilities in Kentucky, northern Indiana, out in Iowa. So we're really big on the aluminum side. We own and operate our own non-ferrous yards. We do some ferrous as well, predominantly non-ferrous though. So you know, we're big into UBCs. We participate in the deposit program in the state of Michigan and in the state of Iowa. We do a lot of aluminum, you know, trading, brokerage across the country. So we've got some value add processing aluminum plants that we built in the last couple of years. One up in Kalamazoo, Michigan, one down in Russellville, Kentucky. So you know, we're kind of growing and filling niches in the marketplace.
Nice. Well, you have to feel the ownership group has to feel good about their, you know, moving pretty hard into that aluminum market, at least lately, right? With the way the aluminum, the premiums and the pricing and everything has been going crazy.
It's
And
wild.
you and I have been doing business since you were at Novellus, and I think we
Correct.
originally sold you some UBCs and maybe a little painted siding, but probably mostly UBCs. And then
Yep.
I think when you moved to Schupan, we kind of opened up the book of business and we did a little bit more. But when you say value add, like without getting too far into any proprietary information,
Yeah.
what does that mean just for the average scrap guy?
Sure. Yeah,
What,
yeah, no, that fair. Yeah,
okay.
we're taking lower grade obsolete items that mills, a lot of like primary mills would have a difficult time melting themselves. They'd run into chemistry issues or quality issues, and we're processing those to clean them up. So a great example is we're taking irony extrusion,
Mhm.
running it through an aluminum shredder. We've got X-ray sortation, all kinds of magnet separation. So we're liberating all of the zinc corners, all of the attachments, thermal, whatnot, so that we're developing a 63 shred package that's desirable for sheet mills,
Gotcha. They
or
go
in
right,
that in this case, billet mills, billet manufacturers.
right to basically you're enabling primary mills to take, material that before it'd have to go to to a secondary. And
Correct.
I've
Upcycling
heard,
scrap, I guess, is a way to say it.
okay, so and I've heard this before. Maybe you give me a little clarification on it. Is it true that once material, like say a Irony 63 or something like that, that if it was cleaned up properly, it could stay in that primary mill circle for for what it's worth. Once it goes to a cast type material, is that material is kind of gone forever out
Correct.
of the primary circle?
Unless you dilute the hell out of it, yeah. I
Okay.
mean, once the elements are in there, there's maybe some newer technology that's coming around now where you might be able to tweak some of that stuff. The
Mhm.
only thing you really lose in the melting process is magnesium. Everything else stays the same. So once you have higher silicon levels, higher iron levels, the only way you're going to get that down is through dilution. So yes, once it, kind of ends up going into a different grade, the odds of it moving back up the supply chain are very limited.
And the reason I ask that is because that when you're out there looking at like what's the value difference between say a cast product and a primary product, I mean that's got to play a pretty big role in that, right? Is just that factor, I would
For
assume.
sure.
Okay.
Yeah, yep. That's 100% correct. I mean, the more, I guess, the more options that a scrap unit has to go, the more desirable and the more universal fit it is. Like, so if you look at something like EC, right? Very, very clean scrap item. It's 1350 primary, like, low silicon, low iron, low manganese, low everything, pretty much.
Yeah.
It can go into a lot of different items, and a lot of mills use that as a prime replacement. So it's kind of like the universal fit. Everybody can buy it. Um, start getting down into like some of the 3000 series grades. Okay, well, then it has to go into a 3000 series coil product. And at the further down you go, so yeah, 100%, it comes down to like how clean the material is, and I guess how many options there are in the marketplace to utilize it. There's always the supply demand factor, but at the highest level, it kind of comes down to what's the chemistry of the material, and what kind of contaminants are in there. Is it painted, polycoated? Is it bare? The more you remove those, the more attractive it becomes to a larger audience.
And I think that that's super important for people to understand that, your small and medium sized recycling facilities, they're just trying to gain an edge somehow, some way. And that's why I bring that up. And, as we kind of continue this podcast, throughout the year and we start talking about spreads and, how to, achieve the most value for your scrap because it's a competitive world out there, right? And so,
Mhm.
I think your ability to sort, segregate, upgrade is really where you're probably going to have your most success financially, in your business. And so it's super important to understand like what's driving that behind the scenes is, and I
Yeah,
think that's why I wanted to kind of for you to touch on that is, the better you sort your material, the more homes you have for it, which really probably does feel like pretty basic knowledge if you've been in this business for, like me, my whole life, or you for how many years now?
uh, uh, going on 20. Yeah,
Yeah. I mean, when you've been in it 20 years, you're like, yeah, that seems kind of common knowledge. But there's so many grades of aluminum. There's so many, different specs to meet for different products, for different grades. And so I've been having this conversation with multiple people. I say, the better you can sort it, pick your categories, be really good at that, make a quality product, you're going to
yep,
have more options. And I think understanding what is a quote unquote quality product is super important in order for you to maximize the value of the
sure.
material. So
Yeah. And then the other thing I think that kind of goes on top of that, and number one, 100%. segregation, sortation, keeping your scrap grades clean. Kind of above and beyond that, I think the next thing that you end up seeing, and I run into a lot with smaller yards and things that changes, if you get enough volume and they can start packaging material to where they're doing larger truckloads or baling material, like, if your scrap can travel, you open up more homes as well.
Correct.
We do that with our yard material as well. There's a lot of times that we push, like, extrusions tend to move loose, but I'll be giving them insight on what I'm seeing out in the marketplace. And there's times where I'm telling them, hey, I want you guys bailing as much as possible. They don't like to do that, but it opened, you kind of got to be opportunistic on what's available out there. So the further your scrap can travel, the more outlets you have.
Makes sense. Well, let's get right into the let's
Yep.
this is like our first one, so we're gonna feel our way through this process.
Yeah,
But I mean, I really want to discuss. I mean, aluminum has been a hot topic probably all of 2025, before that, it was started. The premium started to gain traction and whatnot, and then when Trump came in and implemented the tariffs and basically said the 232 tariffs were in full effect, and he was going to even probably be more aggressive than the previous administration. That really, from my perspective, is what really set that premium on fire, right?
it did. Yeah, yeah. And so actually the Trump's first administration was the original 232. It was a 10% tariff. And that's kind of when the premium got some support. And then this,
So for layman's terms, like let's just break it all the way down.
yeah,
Let's treat me like a third grader because that's about my mentality. Like maybe fifth grade on a good day. So explain to me how this started, why the premium exists, and kind of what's driving that
sure.
pricing.
So the primary driver for this is to domesticate aluminum manufacturing or primary aluminum production, which is, brand new aluminum where you're taking aluminum bauxite, smelting it into, its purest form,
Okay.
prime, um, domesticate that in the US. And the big premise for that is self-defense, right? We don't, over the years, so much of the aluminum primary production has been offshored and moved to other areas, like, so China ramped up very, very heavily into primary production. Most of the prime that the US gets comes from Canada, and there's very, very few smelters operating in the US. So, if we were ever to go to war, there's, national security issue. So that's kind of what's driving it. And Trump's first administration issued Section 232, a 10% tariff on steel and aluminum. And what that basically means is anything that you're importing into the US that's not manufactured here that's an aluminum product
Okay.
or steel is going to encountered a 10% tariff. Then fast forward to 2025, that's when things really got increased. It went to 25% and then it went to 50%. And that's currently where we sit right now is there's a 50% tariff on all material that comes into the US. And a very significant portion of our primary does come from Canada, which is kind of why you see that premium. The premium's been rising to in accordance with the tariffs.
So, for example, before the 50%, like when it was 10%, what they call the quote unquote Midwest premium?
Oh, geez. 20
Roughly
cents, 20,
20.
25 cents.
So, and for people that are trying to understand how the aluminum scrap is purchased and sold and whatnot, so you would take your, let's say, your LME price,
Correct.
right, which is, let's just say, for rough, easy math purposes, a dollar. Okay.
Yep.
And you would add on the 20-cent premium.
Premium.
So technically speaking, people are buying, people like yourselves, primary aluminum mills, they're buying material based off a dollar 20
Correct.
price, correct?
Yep. Yep.
So now you fast forward to today, and let's say it's a 50% premium, and let's just use the dollar as a baseline. What does that premium look like today?
Well, so the LME is higher, which
Yeah,
also goes
LME, but let's
into
just say it was a dollar still.
That premium would probably be 50 cents, 60 cents,
So
but
you,
aluminum's not a dollar.
yeah,
The
yeah.
premium right now is like 96.85. It's almost just under a dollar is where
Okay.
the premium's at.
So
But
if for example, if aluminum was still a dollar, now you're looking at almost a dollar premium. So
yeah,
right, just so you're looking at, say versus $1.20 aluminum, you're looking at a $2 aluminum. That's where you're getting a lot of your price increase. Now, obviously, the LME has
correct.
marched up and the premium has. So
Yes.
today, where does the LME sit and what's the premium on top of it?
Premium, the LME kind of came down a little bit this morning, but we're at 30, like 30.60. And with the premium at where it's at, all in aluminum price is like $2.35,
Okay.
which
But when you say 3060, you divide that number by
2,204.62
because
to
that's
get
a
to it.
metric ton, right?
Correct.
So
Yes.
that's where when they're talking about 22 or 3,000 or whatever, they're doing that math. And I don't even do the decimal. I just say 2204 just because it's easier.
Yep.
It's going to get you where you're close to where you want to be, right? So you got that. So you've got that, which is, what is that? 33 divided by 2204. Is it a buck and almost a buck and a half?
Uh, yeah. So you got a buck, is it a buck 30, buck 39.
Buck 39. Okay. And
Yep.
the buck 39 plus, what'd you say the premium is?
So it rose to 96.85,
Oh,
which puts you at, so 96.85 puts you at 235 and a half.
so I mean that's a pretty big swing from end of 24 election time to today. I mean,
Yeah.
what is that, a dollar? Like all in, probably a dollar swing.
Oh yeah. Yeah. And if you look at like historicals, I think the last, all-time high prior to where we're at currently was back in like 22. We had like a 3,600 per metric ton, dollar per metric ton LME and like a 40-cent premium,
Mm,
which put us a little over $2, like 206.
yeah,
So we're 30 cents, we're in uncharted territory from
gotcha.
aluminum value perspective.
Makes sense. So, and the reason I want to just kind of go over that quick lesson, A, it refreshes it in my mind, but B, just so people can understand like how this aluminum is being priced. When you look at the LME and it only looks like it only went up 30 or 40 cents, but it's really like it's a dollar all in. Now you can see where some of these prices are, why they're climbing as hard as they are.
Yep.
Now, it's always supply demand, right? And how has that affected this premium and the tariffs and whatnot? How has that affected the supply side of the business?
A ton, a ton.
Okay.
So, naturally you'll see in historical trends, you'll see as the all-in price of Midwest transaction goes up, the spread for scrap widens out. So, we were talking about that, whether it's $1.20 or $2.35, this is your all-in price for aluminum. All
Hmm.
the different grades of scrap trade at a discount to that. So you might have 63 bare here, 63 painted here, UBC down here. They're all as a discount to that. And as that number grows, the spreads widen out. And that's natural. But what you're seeing right now with the premium where it's at is it makes the US the ultimate destination for all scrap in the world because not there's the what we call the Midwest premium is just a regional premium. There's regional premiums in other areas of the world, and those aren't going bonkers because they're not affected by tariffs like or 232 like what we're seeing in the US. So there's a very large arbitrage or trading opportunity where folks from other regions of the world can ship their scrap to the US, pay all the, additional freight costs, and in some cases, even the tariffs that are associated with that. So 232 does not apply to scrap. That's for you know, like finished good type products and primary aluminum. Doesn't
Mhm.
apply to scrap. What does apply to scrap are the reciprocal tariffs that Trump imposed. And so even in today's environment, you're seeing material being imported into the U.S. So it's completely changed the supply demand dynamic. There's a glut of supply, and so we're at historical wide spreads on pretty much any commodity that you look at, because of the attractiveness of the premium and all scrap wanting to come to the U.S. And just the all-in value.
So if explain this one to me, if the material, if all this material from other countries is wanting to come to the US, why does the premium keep climbing? Because you would think, right, it would kind of be create an inverse, like there is no premium, like we're getting what we want, right? Like why do we need a premium if we're getting what we want? So what is causing the premium to keep marching forward and the supply to just not, to keep coming? You would think it would kind of the old supply demand curve, like they would inverse each other, right?
Right. No, that's a good question. So because the premium is not a scrap based indicator. It has nothing to do with scrap. It's all about the prime and the primary, like, so it's that all that base aluminum level. That's
Yep.
what it's based off of. And the fact that the US hasn't, to any significant degree, restarted primary production of aluminum, we're still importing a ton of prime from other regions, primarily Canada, that's paying that we have to pay that 50% duty needs to be embedded into the price. And so you've got this, and that's where you're seeing so the price is here, and what you're seeing instead of the premium coming down, what you're seeing is you're seeing the spreads decline on all of the scrap grades. So a perfect example, like UBC's, there's been a widening as a percentage of Midwest transaction from the beginning of last year to the beginning of this year of about 30%.
Wow.
So yeah,
But if you're noticing, and there, I bring that up because it kind of circles all the way back to like where we originally started in conversation is if you have quality 63 bare mill finish production scrap, and these manufacturers, smelters can basically substitute prime for that for versus going out to the market and buying prime from Canada or somewhere else where they are paying that 50% tariff, that duty, whatever you want to call it. That's where you're getting that really high value premium for your quality material. Is that correct?
correct. Yeah,
Because they are able to substitute a certain amount of prime for that material. So there is a value driver there.
correct. Yeah, yeah. The more attractive you make your scrap, the better pricing you're going to get for it. I would still say, there's a lot of money being made right now on the recycle gain from the mills, just as high as the aluminum prices are, and the influx in supply that we saw with the high premiums. The recycle gain side of it's probably the highest that it's ever been. So
Recycle gain, you said?
yeah, it's kind of what like so more than what you need to know, but if you've got your base metal aluminum prices here, right?
Yeah.
All of the fabricated products that you make, whether it's billet, extrusion, flat rolled coil, like can sheet, automotive body sheet, all of those trade at this plus a fabrication premium. The scrap is bought at this minus some sort of discount, whether it's a fixed discount or a percentage of what that is. And the difference between this level and what the scrap is what's called recycle gain.
Okay.
So, like, that's my mill talk coming out of me from my
No, no, no,
prior
no,
life.
no, that makes sense. Because then they can basically add that back into the production and they're not paying the premium on top of it, correct? So they
Correct.
get that value add driver back in,
100%.
but they already know they're going to lose XYZ amount in the manufacturing production process, but they're actually be able to gain that back at a really nice spread, nice premium compared to what it has been previously. So,
Yep.
right.
Yep.
And just because I think it's in the news a lot lately as well, is how much of this market is being driven by a slowdown in manufacturing. So is there less available prime quality, whatever you want to say, material, even though like domestically, because I do feel like 2026, and this is just my opinion, but I feel like 2026, you're going to see some manufacturing come back. I think the market should strengthen a little bit on that front. But because I do think 24 being or 25, 24 being an election year and 25 being just kind of a year where nobody knew whether to shit or go sideways because of
Right.
with the tariffs and yada yada yada, and a whole different administrative outlook on how the country should operate. That takes time to digest. It takes time for people to feel comfortable to make investments and whatever.
It
Uh,
does. Yep.
has that affected the supply available of quality scrap domestically from your point of view, from what you're seeing?
Yeah, for sure. Everybody has kind of reduced their supply chain, right? Everybody's kind of running hand to mouth right now. So there is less scrap being generated. To your point, I think there was a lot of uncertainty in 2025. There still is a lot of uncertainty right now regarding economic health of the country, where the tariffs are going to go. Really, at the end of the day, no one wants to at $2.35 aluminum. No one wants to be in a super long position when the music stops. And if a deal gets worked out with Canada, which doesn't look likely at this point, but if it does happen, and you would see the premium drop, significantly overnight, and you would have a bunch of overpriced inventory on the books. So you've got a lot of people kind of in a hand to mouth type, just taking enough orders to fill what they've got and not have too much inventory on the ground.
That makes sense. Makes sense. So is that making, whether it's consumers like yourself or smelters, is that making them reluctant to lock up long-term contracts? Is that making them reluctant to, put together, any big deals or big volume deals? I mean, are you guys seeing that on your end where you're kind of like, you guys are still trying to navigate those waters?
We've definitely seen a reduction in the amount of folks that are looking to contract annual material. And the belief is that the spreads are going to continue to remain wide, because 232 is not going away. And that's been the primary driver for what we've seen. Another piece of what we've seen is we've seen some of the aluminum mills in the US have had some production issues, hot mill fires, where they're out of commission. So we've seen an actual decrease domestically of how much recycled aluminum can be produced here in the US. And so, there's between that and the premium, the spreads are going to stay wide. And so, yeah, consumers have kind of dialed back how much they want to put forth, because they don't want to be in an overextended situation. They want to buy below what their needs are and then be able to fill in the spot market.
Gotcha. That makes sense. So Mike Anderson, as the VP of Materials Trading for Span, what are you looking at? Like, what are you paying attention to? What
Yep.
what are you reading? Like when you're trying to understand this market and where it goes, this month. What's top of mind to you?
Yeah. So, probably the biggest thing short term, yeah, I'm always looking at what's copper doing, what's driving the LME, right?
Mhm.
So I think over the holidays you saw like Chinese cut production of copper by about 10%, which has driven that through the roof. Aluminum's followed suit. Um, then there was a mine disruption. So you kind of always looking at the underlying factors, bauxite production, other metals. But really right now, what I'm looking at is and going into a new year is always a fascinating time in the scrap market because it's almost like there's a reset button, right? You
Yeah.
kind of get to the end of the year and a new year starts. Uh, Folks have new, trade positions to work against. So you're always trying to feel out. And I'm still kind of going through that right now, feeling out, where the market is. Certain great, like certain commodities, like on the billet side, are it's hit or miss. Some folks are value buying, others have some prompt needs. And I think it all goes back to what I was saying is nobody's really sitting on a glut of material. And if a need pops up, they have to pay what they need to get the material. But you kind of what I'm watching right now is any developments on the 232 front, which don't look like there's any changes coming. Obviously, you're always looking at geopolitical risks or tensions in the world, right? So
Yeah.
eyes on Venezuela right now.
Yeah.
You've got the Supreme Court, could be ruling as early, I think, as this Friday on some of the reciprocal tariffs that Trump imposed. If those get struck down, then that makes scrap availability cheaper in the U.S. or more prevalent, which could reduce spreads and lower prices. So, I think
So
those are
just
kind of the things that I'm looking at.
yeah, so when you say that last piece, just because I think that's relative to, what's going to be hitting the news cycle in the next week or so, right?
Yep.
Is that reciprocal tariffs determination by the Supreme Court. If the Supreme Court makes a decision that reciprocal tariffs are not quote unquote legal or whatever, right? Then that will make that scrap coming in from it'll put more pressure on the domestic scrap because now scrap can come in from these other countries a little more freely and a little bit cheaper. Is that essentially what you're
Correct.
saying?
Right. Because right now you're seeing anywhere from like 15 or 20% all the way up to 50%, depending on if you remember that whole chart that came out that this
Yeah.
country got 50%, this country got 40%, this one 30. Those are impacted on any scrap imports that come from those countries. Um, so if those go away, then that just changes the dynamics to be even more attractive for that material to come to the US, which
Okay.
puts more pressure on the domestic production and will ultimately, it's not going to change the Midwest transaction level, but it's going to change the spread at which scrap commodities trade against that all-in aluminum price.
Makes sense. And so the next piece of that puzzle is like if you're just the small, medium-sized, scrap facility owner and you're the trader, you're the guy selling the material, I guess the decision is on you. Like, if you feel that those tariffs could go away, now might be a good time to move some through your inventory if you have some. If you
Right.
feel they're not going away anytime soon, you feel good about where the premium lies today, and maybe it even gets bigger. Maybe geopolitical events drive the commodities harder like they have the last couple, weeks for sure.
Yeah.
And that's probably thin trading, but here nor there. I think that you're probably sitting in a good position, right? But that's why we play the game. We get to make those calls. We get to make that decision. Do we buy? Do we sell? Do we let it go? Do we put inventory in the warehouse? And
That's right.
I think that's probably why this business is so intriguing and so interesting to so many.
Yeah. Rest assured, you're not always going to get it right. I can count, and
I know
unfortunately,
that feeling all too well.
right. And unfortunately, like the ones that you remember are the ones are the ones that hurt the most, right? Like
Yes.
you don't really remember the ones that you got right. But to your point, like that is what makes the industry fun is you're kind of looking at all these different pieces and trying to predict what's if this happens, then what does that do to the market, or what does that do to this? And you're making educated guesses on
Slap
basically,
gambling.
yeah, yeah,
Yeah.
exactly. Right.
That's why the industry loves when
Vegas.
Hiroshima goes to Vegas. They're like, oh, this is our spot, right? Like, we do this all
Home
day
sweet
long.
home.
So, real quick, just when you're looking at grades of scrap, the other day I hit you up. I say the other day, but it's probably been a month. I was asking you about basically a painted siding product, right? And I said, hey,
Yep,
what do you know about this? And you're like, well, that's kind of a plentiful product out there right now, right?
it
And
is.
when you're looking at the market, for examples, like what's kind of a material that a lot of people are looking for? What's kind of seeing good supply? So it is a plentiful product. I mean, as you project this month out, like what are people looking for? What is, what should a guy be kind of making sure he's moving? And just in your perspective, I'm just
Yeah.
curious. Uh,
Yep. So,
think about this any angle you want to. Don't feel obligated. I just kind of like to kind of give the guy, people listening, like some value add, like, hey, if you're
yeah,
seeing this product or you're seeing this grade, like you're gonna have some good homes for that or whatever.
yeah, yeah. It's the can sheet market's been pretty depressed. So all of the 3000 series grades that travel along with that are probably in a pretty rough spot. So there's homes for them, but the prices are low, right? Compared to where the all-in aluminum price is. So that
Yeah.
would be like your UBC, your painted siding, old sheet that's gonna get upgraded into like a 3X shred package or go into the secondary. The MLC, those are all kind of like the tougher grades or the lower prices.
Mhm.
Extrusion, like I said, it's really weird. I'm still trying to get a good lay of the land there.
Yeah.
There's some needs that have arisen. You're able to get some decent sales out. There's some value buying going on. I would say that like so like extrusion grades will probably be okay. And like your common alloy grades like 5052 scrap, 5182. I think those are going to be like automotive scraps and common alloy um, grades will probably be relatively decent. But and then there's always the high purity stuff like the
Yeah.
1350s.
The ECs and like
Yeah,
that's gonna, like you said, a prime substitute. Like there's gonna be, that can go because it can go to so many different
yeah.
markets.
But rest assured, pricing on all of those
Yeah.
are wide, right?
Well, yeah,
So
it's wide, but I mean, and we say like, oh, that those are kind of not necessarily dog items, like on the 3000 series, but just their spread compared to what the market looks like today is
yes,
significantly wider. And I think
yeah,
that's just what we're trying to kind of convey is not that that price sucks, because relatively speaking, the old sheet price today is a lot better than we've seen it in a long time, right? It's just not keeping the pace that the premium's keeping. It's not
correct.
keeping the pace
Yeah,
that they're
yeah.
on. And that's
So
the tricky part, and where I think the value of this podcast comes in for the guys that are more on the buy side when you're dealing with your manufacturers and you're dealing with these your customers are paying a lot of money for material to create, whether it's windows or to their mill and 61 and machine shops. And when you sit there and you walk in and say, well, the price of scrap is definitely not keeping up with the premium you're paying on the new side, you can get some funny looks if you don't have
oh
an
yeah.
answer for them, right? So the important piece is like you better have an answer. You better be able to justify and explain why your scrap price has only moved up 20 cents while their buy price on the manufacturing side has moved up $1.20.
And
And
that's very legitimate point and something that we've kind of just gone through with our industrial base that we service in the northern Indiana, western Michigan areas. Is kind of leading up to this year. There's been a lot of information sharing and hey, here's what's going on in the market because you're right. If you're just buying material and you're looking at, okay, I'm paying this aluminum price plus a fabrication premium, they're looking at it and saying this is the most expensive material I've ever bought,
yeah,
and then they go to sell the scrap and
and
it's
they're
much
like,
wider.
what?
They kind of need to understand how did we get from A to B. Like they
Yes.
think
Yeah.
they think
Because
they're getting
those
taken
spreads
advantage
have
of. But
traditionally been a lot tighter, right? Like,
yes,
from their perspective. And I think that's why I like this podcast and being able to, so when you walk into that customer, you can explain what you're seeing. You can you can explain the dynamics of the market to them and say, this is why these things are happening. And this is why we're not seeing the premium on the scrap or whatever the
yeah.
case may be. It's just super important to be able to communicate with your customer base. So, what about my one last item I was going to ask you about is because aluminum wheels has always been kind of like a tricky one, right? Because the 3000 series, but it's, like that spread has definitely significantly widened out over the last probably 3 to 5 months, I'm guessing, maybe longer, 6 months.
Yeah. Uh,
Um, and is that just back to the old like supply demand? Like there's a glut of aluminum wheels out there and the homes for them are minimal, or like is it just because it's a 3000 series aluminum and there's just not a lot of
so
demand?
actually, yeah. When I say it, and when I say 3000 series aluminum, I'm talking like the raw grades, like 3003, 3105,
Okay.
30, yeah, 3004. 356 is kind of what wheels are.
Yeah.
It's a cast grade, so it's a secondary grade.
Yeah.
And I'm much more versed in the primary side, the wrought alloys than I am the secondary. But
Uh-huh.
I do think there's a supply demand piece of that. I also think that with higher interest rates, some of the disruptions that I talked about on the hot mill side, there's been some curtailment of automotive production. So I don't know that the demand on that side is all that strong.
Okay.
So I think that's kind of what's driving the price there with like 356 wheels.
That makes sense. Makes sense.
Yep.
I sell a decent amount of aluminum wheels, and I know I just because, and I think that a lot of people listening to this podcast that are in the, your traditional, we buy cars and we, it's just they're the small medium sized scrap yards. We see a lot of aluminum wheels, right? One facet or
Right.
another. So that's always an item that kind of sticks out.
Yeah.
Sometimes that's a hot item you can't get enough of, and sometimes it's like you got more wheels and you know what to do with and homes for those wheels.
Right.
Well, anything else you want to leave anybody with on this end until we meet again next month?
I don't think so. I appreciate the opportunity to be here. I think this is yeah, this is good. It's going to be fun. This was fun and it's going to be fun. Yeah.
Yeah, you've contributed to our newsletter we used to do, and I'm going to kind of revamp that and maybe add in some of this conversation to that newsletter. You do a great job of keeping everybody kind of informed with your email, and I do appreciate that. And like most importantly, we've been doing business for a long time. You've always treated me really well, and that's really, what I appreciate the most about the relationship. So I do look forward to this. I look forward to
Yep.
once a month, kind of, what breaking down the market, what's changed, what's good, what's bad, indifferent, and hopefully people get a little value out of this and they can decide whether they buy, sell, or hold. That's on
Yep.
you. You run your business the way you want. I'll run mine, and hopefully we'll all find a way to make some damn money in 2026,
Gamble as you please. That's right.
See you in Vegas.
That's right.
All right. Thanks, Mike. I appreciate you, man. Looking forward to doing this again next month, sir.
Yes, sir. All right. Thanks, Brett.